George, the financial sector and banks in particular are clearly a beneficiary of a higher rate environment. How are they faring at the moment?
Right, so whilst it has been a difficult macro environment, the sector outperformed last year, and that outperformance has continued into the new year. So whilst there have been concerns about central banks raising rates into what is a slowing economic environment, the sector's benefited from material earnings upgrades, which have been supported by that shift in the interest rate environment. So European banks would be a good example of that. So they've now seen 2 years of continuous earnings upgrades linked to that shift in the rate environment and coming from what was a protracted, a low and negative rate environment.
Okay, the obvious headwind is a recession, and we don't know whether that's shallow, deep. I mean, banks are having to make higher provisions for defaults on loans. What are you seeing at the moment in terms of defaults, and what are you projecting?
Yes, whilst it's understandable the market is focused on this aspect, given that it's an uncertain macro environment, to date we haven't seen a material shift in terms of asset quality trends. Deterioration to date has mostly focused on areas such as US subprime. We do expect some deterioration going forward in the subsequent quarters, but crucially we don't expect the level that's being priced into current valuations. The reason for that being that banks haven't added much risk onto balance sheets going into the slowdown, and also there are significant amounts of savings in household balances for all but the lowest income cohort.
Okay, now the Financials Trust is global by nature. You've got quite an exposure to Asia. What are you seeing there? What opportunities? What's your positioning?
So the largest exposure is to India, where we continue to see strong operating trends. Domestic consumption has picked up strongly after COVID. Loan growth is at robust levels, and we are starting to see a revival in terms of capex trends. So overall, it remains an attractive aspect of what we're looking at within Asia. It's also a key beneficiary in terms of the relocation of supply chains and the China Plus One strategy. Beyond India, we are looking to get exposure to China reopening as a theme, and that's primarily through additions to exposure within Hong Kong, whether that's the stock exchanges, the banks, and life insurers. We've also looked at other areas of Asia, such as Southeast Asia and Thailand, which will be a real beneficiary in terms of the recovery of tourist numbers as China reopens.
Okay, now higher interest rates are more of a headwind for some parts of the financial sector, thinking about financial technology companies, startups. Are they areas that you're looking to avoid?
So the trust exposure to fintech is around 6%. It's remained broadly stable from last year. I think we recognise that it is harder for earlier stage fintech businesses to raise capital and continue to maintain that level of growth. Our focus is more on the more established, more mature, profitable fintech businesses where we've got good line of sight in terms of earnings visibility. I think we have seen a major derating last year. Fintech as a sector fell over 30%. So what was quite prohibitive in terms of valuations, we're now starting to see a lot more opportunity. So longer term, I think this will be an area that the trust will increase allocation to.
Okay, and now finally, just taking a step back, what's your outlook for the sector, and can you just touch on your high-level positioning within the trust?
Yeah, so we remain constructive on the outlook for the sector. Clearly there's a strong tailwind from that shift in interest rate environment. We have looked to shift our exposure recently, so to benefit from that earnings tailwind, we've increased our allocation to European banks, and we're starting to see some strong results coming through for the fourth quarter. As noted, we've added to aspects of Asia. We've raised our exposure to private sector banks in India, but also looking to play that reopening theme from China. So in terms of our bond exposure, we saw an opportunity to quite materially increase our allocation last year. Given the increase in yields, we started to see a very attractive risk reward, so that's been an area that we've also added to. So offsetting that, we've reduced our non-life exposure slightly, and we funded it also through raising the gearing on the trust.